What if I told you the crypto market, our crypto market, just got blindsided by something no one saw coming? Yesterday, we were staring down the barrel of a Cardano collapse. Fear was rampant, the charts looked grim, and then, in a single jaw-dropping moment, everything shifted. Cardano, the sleeping giant, just surged almost 7% in a day. 7% in this market. But here's the burning question echoing across every trader's mind. Is this the end of the downtrend, or are we about to get hit by a brutal, crushing fake-out? My fellow crypto enthusiasts, welcome back to the channel. You know I'm always here to break down the real story behind the charts, and what happened with Cardano in the last 24 hours demands our full, undivided attention. For weeks it felt like ADA was in a freefall. We watched it relentlessly bleed value, inching closer and closer to that critical, almost psychological 50-cent support level. Many of you I know were feeling the pain, holding on, wondering if the bottom would ever come. It's been a relentless sell-off, leaving a trail of doubt in its wake. But then, on June 24, 2025, something unforeseen happened. There was a sudden, violent surge, almost 5% initially, and then wow, it quickly pushed closer to that incredible 7% mark. This wasn't just a ripple, it was a tidal wave that crashed right through the bearish sentiment. And trust me, it caught everyone off guard, from the seasoned whales to the everyday retail trader. The question isn't if it happened, it's why. And honestly, more importantly, what does this mean for your portfolio? Is this the turning point we've all been desperately waiting for? Or are we actually being set up for a devastating bull trap? Now let's cut through the noise and get to the nitty-gritty here. What exactly sparked this sudden, almost unbelievable turnaround for Cardano? If you were expecting some groundbreaking new tech announcement or, a massive institutional adoption, you'd be wrong. This bounce, my friends, was ignited by something far more volatile: geopolitics. I'm talking about a fragile sense of calm that swept through global markets after a truly unexpected announcement. U.S. President Donald Trump, via Truth Social, claimed he had brokered a ceasefire between Israel and Iran, bringing a temporary halt to a 12-day conflict that had been rattling markets worldwide. Think about that for a second. The world held its breath as tensions escalated, and crypto, being a high-risk asset, felt the brunt of that fear. Panic selling, liquidations, we saw it all. But the moment word of de-escalation hit, investors, in a rush of risk-on sentiment, piled back into volatile assets, and Cardano, along with other major cryptocurrencies, exploded upwards. So yes, it was fundamentally a news-driven rally, a collective sigh of relief that translated into billions flowing back into the market. But here's where it gets complicated, where the tension builds. While this news provided the initial spark, we need to ask, is there anything underneath it supporting this move? Or is it simply a house of cards waiting for the next geopolitical tremor to send it crashing down? Let's dive into the technicals, because as much as news drives short-term pumps, solid technicals are what sustain a rally. Looking at the daily chart, we finally see some signs of life after that prolonged downtrend. The Heikin Ashi candles, which smooth out price action to reveal clearer trends, have flipped. We're seeing 2 consecutive green Heikin Ashi candles with no lower shadows. This is a classic short-term bullish signal, indicating that buying momentum is growing. It's like the market finally took a deep breath. And then there's the relative strength index, the RSI. This is crucial, folks. For weeks the RSI was plumbing the depths, sitting in that dreaded sub-30 oversold region. It screamed bearish exhaustion. But now, the RSI is climbing, currently sitting at 37.01. It's not in the bullish overbought territory yet, but that upward divergence from its moving average, that's a whisper, a hint, that a potential bullish reversal is brewing. The bears, for now, are taking a break. But don't let this newfound calm fool you. This isn't a confirmed trend reversal just yet. We're still below key resistance levels. Cardano is currently battling a critical pivot resistance level at $0.590472. This is the immediate ceiling. Think of it as a barrier that the bulls need to smash through. If ADA can get a confirmed breakout above this level, that's when things get really interesting. Because that opens the path toward our next Fibonacci retracement target, $0.63. Now, if we hit 0.63 from our current position, we're talking about a 7.5% upside. That's a significant move in this environment. But the ultimate test, the true make-or-break level that would truly flip the larger market structure from bearish to bullish, is $0.70. Remember that April breakdown point? That's the stronghold of the bears. Reclaiming and holding 0.70 would be a monumental victory. On the flip side, we have our immediate support at $0.50. This is the level that has repeatedly served as a bounce zone in the past, including just recently. It's a psychological anchor, but if that breaks, prepare yourselves, because the major breakdown support lies at $0.42. A move to 42 cents would signal serious trouble and validate those dead cat bounce fears. So, the question remains, is this a genuine breakout or a calculated bull trap designed to lure in unsuspecting investors before another ruthless dump? The geopolitical calm is fragile, and the technical indicators, while showing early signs of strength, are not yet screaming all clear. We are walking a tightrope. So, what's the verdict, my friends? Will Cardano continue its ascent, or is this just a temporary reprieve before another leg down? Here's my unfiltered take. The current 4.65%, almost 7% as it peaked daily jump in ADA is absolutely significant. It's a testament to the power of news and market sentiment. The RSI recovery, the Heikin Ashi flip, and the solid bounce from that strong 50-cent support level strongly suggest that a short-term rally to 63 cents, potentially even 65 cents, is very much on the cards. If the buying volume continues to pour in, we could definitely see that next Fibonacci level tested. However, and this is a huge however, until Cardano reclaims 70 cents and holds firmly above it, the larger bearish structure remains firmly in play. We are still in rebound territory, not a confirmed trend reversal. We need to see sustained momentum, not just a one-day wonder. Here's what you, as smart traders and investors, need to watch for. Confirmation of volume. Is this rally backed by substantial sustained trading volume, or is it just a quick pop? High volume on green candles indicates conviction. So, we really need to see Cardano not just wick above 60 cents, but actually close strongly above it on the daily chart. That would be, honestly, a huge psychological victory. Reclaiming 63 cents and then 70 cents, these are, the stair steps. 63 cents is the next target. If that breaks, 70 cents becomes the ultimate hurdle to clear to truly escape this downtrend. If Cardano successfully breaks and sustains above 60 cents and 63 cents, then yeah, the next logical stop could very well be 70 cents and beyond. That's where the real excitement begins, where we start talking about a genuine reversal. But be warned, if Cardano is rejected at these resistance levels, especially 59 cents or 63 cents, a retest of 50 cents is highly probable. And if 50 cents breaks, then 42 cents is absolutely not off the table. This market is unforgiving and, geopolitical shifts can reverse on a dime. The crypto world is a high-stakes game, and Cardano just gave us a thrilling, nerve-wracking reminder of that. Keep your eyes glued to those charts. Manage your risk, and stay informed. This isn't over yet. The next few days for Cardano are going to be absolutely critical. Don't forget to hit that like button if you found this analysis valuable. Subscribe for more urgent market updates, and let me know in the comments below. Are you buying this Cardano bounce, or are you waiting for more confirmation? And finally, a very important disclaimer. The information provided in this video is for educational and informational purposes only, and should not be considered financial advice. Cryptocurrency investments are highly volatile and inherently risky. You could lose some or all of your capital. Always conduct your own thorough research and consult with a qualified financial professional before making any investment decisions. I am not a financial advisor. Your capital is at risk.